Welcome back, traders. Happy to have you here today. In this short video, I will show you how to build a powerful trading strategy with the Flag Finder indicator to detect trade opportunities in the market. The Flag Finder indicator is a technical analysis tool to identify bull and bear flags. What are flags? Flags are continuation patterns that occur within the general trend of security. A bull flag represents a temporary pause or consolidation before the price resumes its upward movement, while a bear flag occurs before the price continues its downward movement. Both flag patterns consist of two components: the pole, the flag. The pole is the initial strong upward surge or decline that precedes the flag. The pole is usually a fast move accompanied by heavy volumes signaling significant buying or selling pressure. The flag is then formed as the price consolidates after the initial surge or decline from the pole. For a bull, flag price will drift slightly downward to sideways, and a bear flag will drift upward to sideways. The best flags often see volume dry up during this phase of the pattern. To apply this indicator on the trading chart, search the keyword Flag Finder and select the Flag Finder by Amphibian Trading on the TradingView Indicator Community Scripts folder. As we can see, here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight this indicator and its purpose so you can quickly understand how it works. To do this, we need to right-click on the indicator and navigate to the Settings option. Here are the parameter settings of this indicator. There is the max flag depth. By default it is set to 7.5. This allows the maximum pullback allowed from high to flag. There is the max flag length. By default it is set to 10. This allows the maximum number of bars the flag can last. There is the minimum flag length. By default it is set to 4. This allows the minimum number of bars the flag can last. There is the prior uptrend minimum. By default it is set to 20. This allows the minimum percentage gain required before a flag forms. Next is the maximum flag pole length. By default it's set to 15. The maximum number of bars the flagpole can be. There are more settings for the pole length and flag. It's advisable to leave the default settings. The components are fully customizable in the indicator so the user can adjust for any time frame or volatility. Select the minimum and maximum accepted limits from the percent gain loss required for the pole, the maximum acceptable flag depth or rally, and the minimum and maximum number of bars for each component. Colors and what components are visible at any time are also user controlled. Trading flags. Traders typically use flags to enter on breakouts. A breakout occurs when the price moves above the left side high of a bull flag or below the left side low of a bear flag. Alerts. The Flag Finder allows for 4 different types of alerts: new bull flag, new bear flag, bull flag breakout, bear flag breakout. How does the Flag Finder indicator work in the market? The primary purpose of the Flag Finder indicator is to provide a potential continuation breakout point on the price chart through the formation of flags breakout on the trading chart. This is a very powerful tool for all technical analysis traders using chart pattern breakout in their trading strategy. When the prices are trending up or down, there will be a point whereby the market will come to a pause. This price pause will usually result in a counter-trend price move against the dominion price trend. Once this counter-trend price move has occurred in the market, the Flag Finder indicator will start looking out for possible potential pole and flag formations on the price chart. Once the indicator finds out a possible flag pattern in the uptrend or downtrend, the indicator will automatically plot the pattern demanding in the direction of the dominion trend in the market. In a bullish or uptrend market after a bearish counter-trend price move, the Flag Finder indicator will plot a bull flag chart pattern. While in a bearish or downtrend market after a bullish counter-trend price move, the Flag Finder indicator will plot a bearish flag chart pattern. The breakout of the flag pattern in the direction of the Dominion trend will usually lead to the continuation of the price trend. How can traders use the flag finder indicator in a bullish market? To use the flag finder indicator in a bullish market, traders need to watch out for a trending bullish market. In a bullish market, the price needs to carve higher highs and higher low priced swings as the examples on this price chart. Next, traders need to watch out for the price to make a counter-trend price move against the bullish trend, just as the example on this price chart. The next step is to watch out to see the indicator get its work done by plotting the flag chart pattern on the price chart. The last step, as we can see on this price chart, is to wait for the strong bullish price breakout of the flag of the pattern. Traders can proceed to make buy entry at the close of the bullish close candlestick. Stop loss can be placed at the low of the lower band of the flag. The measurement of the pole should be replicated upward from the point of the bullish breakout for the take-profit target price level. For the reversal of a bearish trend to a bullish trend, traders need to figure out the possible retest of the bullish broken flag upper channel. The retest of the broken upper band of the bullish flag needs to act as potential support for the bullish price breakout. Once the upper band rejects the price upward, then traders can buy the setup in anticipation of the reversal of the downtrend to an uptrend. How can traders use the flag finder indicator for the continuation of a bearish market? To use the flag finder indicator in a bearish market, traders need to watch out for a trending bearish market. In a bearish market, the price needs to carve lower lows and lower highs priced swings as the examples on this price chart. Next, traders need to watch out for the price to make a counter-trend price move against the bearish trend. The next step is to watch out to see the indicator get its work done by plotting the flag chart pattern on the price chart. The last step, as we can see on this price chart, is to wait for the strong bearish price breakout of the flag of the pattern. Traders can proceed to make a sell entry at the close of the bearish close candlestick. Stop loss can be placed at the high of the upper band of the flag. The measurement of the pole should be replicated downward from the point of the bearish breakout for the take-profit target level. For the reversal of a bullish trend to a bearish trend, traders need to figure out the possible retest of the bearish broken flag lower flag. The retest of the broken lower band of the bullish flag needs to act as potential resistance for the bearish price breakout. Once the lower band rejects the price downward, then traders can sell the setup in anticipation of the reversal of the uptrend to a downtrend. The flag finder is a powerful trading indicator that can help traders to detect potential continuation flag patterns for high probability trade setups in the financial market.